Today I want to share a simple man's view on money. And what do I mean by simple man? Well, at the age of 11, I started my first company. And after that, growing up, I was into internet optimization and SEO from pre-2000. Got my career in marketing, digital marketing for small businesses, specifically local businesses, for the last 13 years. And now I work at a Bitcoin company, a VP of marketing, doing marketing for Bitcoin infrastructure. And the thing that I've noticed over the last 20 some years learning about money as just an average Joe is that there's a couple of things. Number one, the money is made by local business owners, small businesses. That's where most of the wealth is. That's what most of the job creation is. And if you want to think about what creates wealth and why we measure our nation on gross domestic product, or GDP, it's creating new value. So why would it not make sense that small business owners who create majority of the jobs create most of the wealth in America, and they get it? It flows into their hands, right? So that's simple. And so by starting my own business at a very young age, I was making more money than a Walmart door greeter. My dad was a Walmart manager for 20 years, and by owning my own lawn company at the age of 11, I was making more money than a Walmart door greeter per hour, and it was awesome. I learned the value of hard work. Now, I went to college for sales and marketing. Originally went to college for photography, had my stuff stolen, thank God, because that'd be a dead-end career, and then learned sales and marketing even further after my father teaching me that my whole childhood. And now I have worked in sales my entire life, always crushed it, always hit every goal, done well, made a ton of money, and worked in marketing, which I've always done very well, and now am still doing it. And the thing that's interesting is through marketing small businesses and medium to sized businesses over the last 13 years, I've got to work with these entrepreneurs directly. And one of the things about these folks and why we're seeing the rise in acquisition entrepreneurship is, the internet marketers who sell you courses and dreams and ideas that are building their brand and getting you to invest in their venture funds. They're telling you, boomers are retiring, they don't integrate technology, buy these businesses and you can take them over and, add value and form an exit, buy it at a multiple of 3, 4, 5x, sell it for 8 to 15x later upstream to private equity, essentially funneling more money into the hands of the rich in the future. Now, when it comes to building wealth, that's a great way to do it. That's an incredible way to do it. But one of the things that also is happening is a transition in how money functions. So right now we live in a debt-based society where you can buy anything you want if you're willing to take out the debt. The question is, can you service that debt? In 2008, we saw the real estate crisis and people who took out too much debt, they could not service their debt, all their homes were taken back. And we're seeing the same thing now, but a little different, where it's multifamily. Folks who are in multifamily, they raise a ton of money from limited partners. And if you paid attention to how to build wealth over the last decade, it's been very easy just to place money in the stock market because all it does is go up. Granted, it follows M2, the money supply. You're not earning more purchasing power, you're just following the money supply, so you're essentially breaking even as far as purchasing power and rewarding yourself with future time. But beyond the stock market, you've got earning equity in a startup, which is a great way to accelerate wealth if you can work at a great startup and get a lump sum of money upon exit, or you invest in real estate. And we've seen a lot of folks that are into real estate, thanks to bigger pockets in some of these channels, tell you to go from, instead of buying single family, work with economies of scale, like think bigger. Think about how you can raise capital or 1031 into a bigger deal, like a multifamily deal, like an apartment complex, where instead of having 1, 2, 5, 10 doors, because you're limited as an individual to get, 10 loans from a bank or whatever, get 10, 15, 20 doors. Whenever you buy over 5 units bundled together, you enter what is commercial real estate. And we're seeing a lot of these guys who got into commercial real estate as a GP, raising money from LPs, the limited partners. If you raise money, you're the general partner. If you give money, you're the limited partner. And there's this way to have passive income, hands off passive income. It's become not only very enticing for someone to be a general partner and raise money, because you can collect a ton of fees and you can leverage debt. That's enticing for some folks, but then it's enticing to be a limited partner in some of these deals because you can deploy, $50,000, $100,000, $500,000 and have passive income coming in. And you're risking your capital, extending trust to the general partner to make money. There's all these tax incentives to do so that the government does because we have a shortage of homes, a shortage of apartments, where if we don't repair these apartments from the 70s and 80s, post 1971, then they're going to collapse. And if these apartments collapse and they don't get rehabbed, then we have an even further housing crisis. So real estate, we're seeing right now in commercial real estate, some of these loans go bad, where they got a floating rate thinking that interest rates will continue to go down. They obviously went up drastically in the last few years, and they're not coming back down. The Fed says they see no reason in lowering rates. The economy's functioning. So all these guys who are raising capital and buying deals, leveraging floating debt, they're in a lot of trouble. It's a problem. So when it comes to wealth, there's a few different things. Let's recap real quick. Number one, you can start a business and make money because that's where most value and wealth is accrued in America. If we measure our gross domestic product, our productivity, and what we do, and most jobs go to small businesses, it's rational to be a small business. It's rational to start one, even though there's tons of risk. It totally makes sense. That's how wealth is built. Part two, you can invest in stocks that follow the money supply. Nominally, your wealth is going up. The number looks better, but is your purchasing power going up? Not really. You can work in a startup, take a big risk. You might hit a home run, you might not, or you can do real estate. These have generally been, over the last 10 years, the ways in which people build wealth. Sure, you can say since like 2017, the normie has understood crypto, and you could have bought Bitcoin or shitcoins or whatever, and dabbled in that and made a bunch of money. And that's its own case, and that's something else. But the thing I want to share particularly here about wealth is there's a couple of specific things that need to be understood. Is when it comes to larger corporate institutions, often innovation doesn't come from within. The innovation comes from looking out into the market to competitors or people who have value that can be purchased and deployed into the corporate infrastructure, is where most growth comes from. Google bought YouTube. Facebook bought Instagram. Amazon bought Whole Foods. Amazon bought Ring. All of these things were something that some entrepreneur started, and they were small businesses. They had a few employees, they built the idea, and they sold it. So it's very rational to start a small business. It's very rational to create something. You may not go all in and, burn the boats and just go all in. That's not necessarily the ideal or a smart thing for most people right now, because the cost of things are going up. Housing, health insurance, food, everything's going up. So you have to work a job. And that's why we're seeing over the last 2 to 3 years, if you look at LLC formation in America, it's going up drastically. People are stepping into entrepreneurship. Why? Well, because people don't make enough at one job. Many people have to work multiple jobs. But part two, you can do a side hustle at nights on the weekends, and it gives you life. Like, who after working 40 hours a week at a job or at a desk wants to just go sit on their couch and work further for the same company and not have a lever you can pull to make more money? Unless you own equity in that company, or unless you're in a sales position, or there's this incentive or carrot that you're chasing to make more, to create opportunity, there's really no reason to do that, unless you're just naive to the fact that entrepreneurship is how you build wealth. So this has become more than true to me after working with small business owners for the last 12 to 13 years. Before I left my marketing agency that I worked at prior, and more context there, the company was at 100 million run rate. So we were doing marketing for small businesses across all of America for 10 years or 8 years in a row. We were in the Inc. 5000 fastest growing companies in America, in the top 0.00001% of businesses in all of America. We were growing these small businesses, marketing them. We'd speak to hundreds and hundreds of small businesses weekly about what their challenges are, where they needed to grow, how we could strategically help them in the sales process, the digital inbound lead process, the customer nurturing process, how to generate reviews and how to improve lead flow, how to optimize for mobile, all of these things, how to generate phone calls. And I got to specifically see everything these folks are challenged with, specifically these 10,000 boomers a day who are retiring. And the one thing is certain is that the people who are entrepreneurs, they're not the type of people who are, blinded by, their own, how they get in their own way. Let's just put it this way. People get in their own way majority of times and don't just commit to something and do it. Therefore, they never take action. They never do anything of true value, because there's always an excuse or a reason not to step out and just do something that you're good at or you're passionate about. You know, so the biggest thing I would say for anyone who's considering, small business, Bitcoin, what can I do to turn my life around? How do I generate wealth? It's not going to be just investing in the stock market, because you're outsourcing your money to someone else. You're trusting they're going to do good and be a steward of your capital. And a lot of these companies are trading at a big multiple, 30 to 50, sometimes 100 times their earnings. So you're just really betting on the future. If anything goes awry, you lose your money. You could do that, but like we've discussed, it follows the money supply, the M2. It's not really creating new wealth for you. It's not giving you more time in the future. Okay, so what lever can you pull? Well, you could do crypto, sure, but if you follow my content and you paid attention to anything in crypto and you're like aware of what's going on in the world over the last 14 years, every crypto trends to zero in terms of Bitcoin. So you can measure your wealth in dollars, where the cost of everything goes up and you're working for dollars, or you can measure your wealth in Bitcoin, where if your savings and your denominator of how you measure value is in Bitcoin, the cost of homes go down, the cost of food goes down. That's why many people save in Bitcoin, is because the cost of anything we want to buy goes down over time. And if you're the idiot who bought the top and just never bought any again and sold at the bottom, you lost money. I mean, you're not a critical thinker, you're buying on FOMO, I don't know. There's an excuse for your behavior. But if you also look at someone who bought the top and said, oops, I hopped in with FOMO, and they just bought the whole way down and back up, they are up tremendously. There's something about consistency, like we were talking about. Most people make an excuse not to commit to something. Why they're not going to start their business, why they're not going to commit to showing up early for their job, why they're not going to build new skills. Those are the people who tend to stay poor. They can't commit to something. Just like you don't dollar cost average Bitcoin. That's why you fucked up that trade. The other piece is why you're not advancing in life. You're not building new skills. You're not taking a risk starting a business. You're not doing the thing you believe in. That's a mistake. That's a huge mistake. So broadly, you have to take some form of risk in order to win. You have to take a job that's going to be more challenging. You have to start a business. All of these things matter. And when it comes to building wealth, again, small business owners, they create most of the value. They're the ones who gets acquired. But something's happening in money right now that's changing. Podcast I listened to this morning with Joe Burnett and Alan Farrington, Alan was talking about the fact of there's this measuring stick we use in public markets, like the S&P 500, the Russell 3000 or whatever it's called, and the NASDAQ. We place businesses in these buckets within markets, and then you can buy a basket of them via the ETF, which is what you do in your retirement account, or you can buy individual stocks. So is there a reason for companies to go public? Maybe, maybe not. Will there be a reduction of that? Possibly. As deflation happens, and what is deflation? Like, the easiest way to think about is, I love Jeff Booth's analogy in his book, The Price of Tomorrow. He talks about deflationary technology. What drives down the cost of things? Well, on your phone now, you've got a camera, you've got a calculator, you've got a guitar tuner. All these physical things we used to have, they're condensing into one item. So there's deflation in the cost of goods. There's going to be a deflation in money, where we're not going to have to print tons of money. We're not going to have to issue tons of debt, because value creation is going to accelerate through making things more efficient. Therefore, capital is not just going to be being thrown everywhere. There's likely a chance that debt is always going to be around. It's never going to go anywhere. It's always been here. But there's going to be deflation in the money supply, and there will be less money in circulation eventually after we print it to oblivion. But there will be a deflationary moment where maybe it's not rational to sell your business for someone to take out debt to buy it. There might be people who choose to hold on to a business because it's kicking off so much cash flow. They buy Bitcoin or they reinvest into the business. Why is the incentive always to sell your business to someone far richer than you who has more capital to protect? The reason people have these funds, like the very, very rich who are buying up everything, if you're watching this still and you're someone who's like, I want to get wealthy, what happens with money when you get it? Well, these people, that have, $50+ million, let's say the family offices, a family that has so much money, they have an office dedicated to managing the family's estate. They then allocate capital and invest it to preserve their capital. The shift that's happening right now in the world is they're not just trying to preserve it, they're trying to grow it, because inflation is going so crazy. So what are they doing? They're coming downstream. They're not just buying multifamily real estate, which every little guru on the internet is doing, and they're trying to take your money from you and getting you to invest in it. They're now buying small businesses. And here's the thing. buying a piece of real estate, it used to be you had to, invest, let's say, a minimum of 50K. There's now, due to technology and just like certain regulation, where you can just go in and invest $1,000 into one of those and get some passive cash flow. You might make $8 a year, $12 a year or something, $100 a year, whatever the math is. And it's just like, cool. Is that going to transform your life? No. Could you have used that $1,000 to do something a bit more valuable? Yeah. But there's these tools out here that let anyone and everyone, invest in this next shiny thing, like investing in a Jackson Pollock painting, or a painting from an artist in one of these fractional services. That's going to be a very big trend over the next few decades, is fractionally investing in things that the rich have already bid up to oblivion. So now these rich folks, these funds are coming down to small businesses, and they were buying businesses that are 5 to 15 million in EBITDA, which is earnings before interest, tax, deductions, and all this. And sorry, train of thought. They're buying these small businesses that are more valuable, that are more sustainable, that have higher earnings, and now they're coming down to the 3-4 million, sometimes 2 million range, because if you can buy those, you can then scale them pretty swiftly. And then the smaller guys being forced into buying even smaller deals. Well, it kind of begs the question, do you go out and acquire a business, which can take, a couple of years of search? It's very hard to find one. Or do you start your own? Or do you buy a smaller business that's doing less revenue than $1 million, which has a bit more risk? But ultimately, it comes down to this. This is a stat you always hear people say. 10,000 boomers are retiring a day. 70% of those businesses those boomers own won't sell. 70% won't sell. So while people are gobbling them up and acquiring them, buying them, 70% won't sell. They'll close. So if a lot of businesses are going to close, you have an opportunity to build one slowly from the ground up. Can you do one job a weekend and not kill yourself and gather Google reviews? Could you do 2 jobs a month? That's 24 reviews at the end of the year. Could you do more than that? Is there ability to do a ton of smaller jobs to build up and generate your reviews? There's tools online to build websites pretty easily. There's all these resources online that give you access to labor in other countries that are more affordable. So can you find something of value to do in the small business sector that can grow and be sustainable? That's a good question. I would say yes, because a lot of these companies, they get bought up and acquired by big money. And there's a lot of folks who work in, let's say, HVAC or plumbing or home contracting, and they may do one service and do it well. When they crush it enough and they built rapport in their community and trust, they vertically integrate. An HVAC company, whenever you're updating and doing HVAC, there may be a need to also work on plumbing in the home. If you have HVAC getting replaced every 10 years or whatever, 15 years, it's likely you're going to need plumbing. The house is older, right? It's likely that you might have drywall that needs to be done or updated. You might have, roofing that needs to be done on a home. These 10 to 15 year cycles of time are when things in homes need to be updated and maintained. So there's going to continue to be vertical integration of these businesses. And all I'm alluding to at this point, I feel like I've kind of gone off on a rant here, but it's been a long one, is the fact that buying a business is one thing, but starting a business is another. With so many businesses that are going to close and not get acquired, it's wise to start a business. It's wise to build an entity that you may have. If you want to get wealthy, what can you do on the weekends that are good for you? And there's the question of, oh, my employer wants me to focus on my job. Yeah, well, your employer doesn't care when you lay on your ass 4 hours a day watching Netflix. Do they? They don't care that you go home and just play PS5 all night and stay up till 2 in the morning. They don't see that. What people will see and feel is, wow, this person's an entrepreneur. They're thinking like an operator. They're thinking like a CEO. They're taking action. Oh God, that's impeding on the value they're creating for my organization. This is what leaders think. This is what owners of companies think. When they see you doing additional things above and beyond what you're called to do within their enterprise to build your own thing, fear immediately gets in their mind. Am I going to lose them? Are they not happy here? Are they going to do something else? Are they going to leave me hanging? This is why whenever people say your employers don't care about you and they'll replace you immediately, is why it's true. Because whenever you employ people, and I don't think all employers feel this way, but I would say, 80% of jobs suck. There's 20% of the companies that are stellar to work for, stellar leaders, people who are deeply invested in your success. 80% of businesses, their entire shtick is they don't want turnover. It costs 3 times more to hire someone than it does to retain them. So hiring people is challenging, and often in this hiring market, the candidate pool is not great. So if you're talented, you're already likely exploring entrepreneurship, because you know working a W-2 at a job that gives you a 3 to 5% raise, you're not going to make enough money. You're not going to be able to keep up with the cost of living. And this is what's so hard about not only being an employee, but also being an operator, an owner, a CEO, a manager of people. You have to grok and handle this challenge. So, take that for what it is. This is why some people build privately. This is why some people are anonymous on X, is because you can be spotted, and someone will look down on the fact that you are taking this entrepreneurial leap. Hey, we pay you good. You don't need to do anything else. Well, actually, I've got a bill that we can't afford. You've never asked about my well-being. People are going to be concerned and bothered by the fact that you have an entrepreneurial spirit, that you're a value creator, that you're an action taker. Ignore them. Pursue your dreams. Pursue what you believe in. Don't doubt yourself, because here's the thing that's going to happen. 80% of people who watch this are not going to take action. 20% of jobs are great, 80% of jobs are not that great. 20% of leaders are great, 80% are not. So if you have a tugging on your heart to do something great and of value for the world, you need to do it, because most people won't take action. And those who do take action, most of them won't see it through and see it through to growth. Very few make it. But if you're consistent with it, if you don't over leverage yourself, selling off everything, raising money from a bunch of people who are going to control you and bend you to their will of what they want to see happen, there's a good chance you can be successful. This is where they call it bootstrapping, where you bootstrap something from the ground up yourself, where you're not tied to a leash by investors who are going to tell you everything to do for your business. This is why people like bootstrapping. You have freedom, you have autonomy. When you raise money from investors, you kind of, great investors are going to support you, and they're investing in you as a founder. They believe in your vision. They trust you. They're investing with good intentions, and incentives are aligned. Some investors, they might just, they say they invest in the founder, they invest in the idea, and then they try to impart their will onto things and change things and just put their hand in on it, and it can get rough. But bootstrapping is valuable because people value freedom. This is America after all. But all in all, I'm going to shut up now. This is getting on to 20 plus minutes. It's important to consider where wealth comes from. It's not going to be just working a W-2 your whole life and plowing it into the stock market. Granted, you can be a millionaire that way, but that's average nowadays. You're going to be an average person. Being a business person and seeking entrepreneurship is very hard. It's very challenging, but the reward is incredible. And one of the most fun things I think for entrepreneurs as you become a leader, as you build a successful company, is you get to pour into people and you get to bring value to their life, and you can reward people and take care of them. And that's what we're called to do. That's what we're called to do, is to take care of others, put their needs ahead of our own, and to love others. And that's honestly one of the hardest things about being a business owner, is you're going to be disrespected, not valued, walked upon when you're providing a service going above and beyond. And that's one of the hardest things about being an entrepreneur. You're going above and beyond to create value, and you're not touting your own horn, trying to get the attention of the world, but people won't value it. A lot of your customers will, but there's always that one squeaky wheel who's not going to value it, who's going to disrespect you, who's going to be rude, and they're going to be the one person that keeps you up at night. They're going to be the one person that makes it hard. And then this is going to happen again and again and again, and it's going to happen every day. There's always going to be some problem. But do you want to control your destiny and have power over your own life and have autonomy and control and create value for others? Or do you want to build someone else's golden road? Do you want to build someone else's dream? You need to think about that. I don't know. I said I was going to start sharing some thoughts, and this is like a conglomerate of all these things. There's a lot of people that want your money because they need it to build their own dreams, and you'll make a little bit, sure. You'll beat the stock market, which follows the expansion of the money supply. you can't just invest purely in Bitcoin and just like expect Bitcoin to do these magical things and make you rich. You need to go out and create value. You need to start businesses. You need to be creative, find and create solutions for folks. I hope this is helpful. This is 25 minutes long. I'm just gonna stop because I could go on for an hour into like deeper rabbit holes, but share your thoughts below. I hope this is helpful. This is definitely not for someone managing a multi-million-dollar business. This is for someone on the brink of starting a business, or they're thinking about small business, or hey, I just want perspective from someone who's watched people build these businesses for 15 to 20 years. You know, I built businesses from the age of 11 across different facets: e-commerce, content, lawn care, you know, digital marketing. But I hope this is helpful. I hope you're encouraged. I hope you can take something from this. If you have questions, share it below. And yeah, you know, we'll do this again. Appreciate you guys. Bye.